Hey guys, as you can see, I'm in my hat because I'm fresh off the mountain in Snowmass, Colorado. I just flew in. I am exhausted, but I would be remiss if didn't talk about what happened today with GameStop, especially because I met somebody on Friday who worked for a fairly new hedge fund that made money on the GameStop short squeeze that occurred on Friday and got the stock up to $70 a share. This morning, I'm trading and I see GameStop goes up to $160 a share. I hope this guy's firm did not sell all of their stock. I don't believe they had, so hopefully they got in there above 100. But I wanted to quickly chat about it because, it's an interesting dynamic going on, and it's something we're talking about, these short squeezes. So, and it also reminds me of trading in 2008 through one of the greatest short squeezes of all time, which was the Volkswagen squeeze, precipitated by Porsche looking to own 75% of it, while the German government already owned 20% of it, and Porsche owned a gazillion call options, and people started to do the math and realized, we have to get out of this short, or we're gonna lose a ton of money, and it was a snowball effect. But let me not be all over the place, because I tend to do that. Let's go with GameStop. So GameStop basically had a short. Now, when people short a stock, they think it's going lower. You have to borrow from somebody that owns the stock. Usually it's like a pension fund who's sitting on the stock and doesn't do anything with it. So, you pay a price to borrow the shares. So it's like, hey, can I borrow your shares? I want to sell them to this dude over here because I think it's going to go lower. So what happens is, say I borrowed 100 shares of GameStop. I pay him to borrow the share. I pay him to borrow, his shares that I now sell in the market, say at like $10 a share. If it goes down to $9 a share, I just buy those shares back, and I've made $1 per share on the 100 shares I borrowed, and I can get back the borrow. Well, what was going on with GameStop is all the people that had sold short were just sitting on these negative or short positions that they held. And when the Redditors in Wall Street Bets forum on Reddit, they call them Redditors, when they started talking up the stock because they knew there was a huge short base, they knew there were a lot of investors with short positions, they just talked up the stock and talked up the stock and talked up the stock to the point where it got a lot of traction and positive buzz, and people start buying it. And when people start buying it, what happens is you have a short squeeze, because people may have, you can have stop losses depending on what you've set up for your account. If you're trading through E-Trade, Power, Ameritrade, IG Index, and Interact Workers, whatever the platform is, you might have a stop loss that says, when I lose a certain percentage, I want out. So if that's the case, they will see that you're now down like 10, 15, whatever percentages that you set for your stop loss, and they will buy your short position back. So if you're short 100 shares, that they will go out, the traders for that platform will go and buy 100 shares for you immediately. Or some people are they're stopped out. Some people are just watching and they just see that they're losing. The problem with being short is the sky's the limit on how much you can lose. Obviously, there's a finite amount of money that you can make on a short, because you can only make as much as, if it's at $10 a share, you're only going to make, the most you can make is $10 a share if it goes to zero. On the other hand, if it's something at 10, that could easily go up to 1,000. It's sky's the limit, like I said. So when you're short, you get panicked and you end up having to buy the position back, and that causes a short squeeze, because then other people have to buy their position back. It's a snowball effect. As it goes higher, more people are losing more and more money, and then you have borrowers that are also recalling their stock, and it becomes a bit of a clusterfuck, really. So that happened in 2008 with Volkswagen. Now, the thing if you read articles, you'll see the dummies that have written articles like, Volkswagen is going out of business. That's people trying to put a story to why people were short Volkswagen. It's like, I don't know who told you that you look like Beyonce to get in your panties, but it isn't true, right? That's what was going on with this story. What really happened with Volkswagen was people were long the preferred shares and they were short the ordinary shares, because they traded at a spread. The preferred shares don't have voting rights, and so that spread would move a few percent here and there, and it was just a very common big hedge fund trade to be long the preferred shares, short the ordinary shares, and take little bits of profit here and there. It was very a very lazy trade, very well known trade that everybody had on. And what happened was Porsche suddenly came out saying that they had tons of call options. Call options allow you to buy stock at a future date, but they're derivatives, and you didn't have to necessarily disclose, and you didn't know who owned these call options. So it took the market by surprise when they found out Porsche owned all of these call options, which would allow them to buy a huge chunk of the company. And they also said that they wanted to own about 75% of Volkswagen through these call options. Then to know that Lower Saxony, the German government, owned 20% of Volkswagen meant there was about 5% left. There would only be 5% left in the end. And that basically told all of the people that were short that they needed to get the hell out of that position as soon as possible. And then a humongous short squeeze ensued. I remember watching it. I think it was like at 80 euro, and it got all the way up to 1,000 euro. I mean, and that market cap was a lot more than GameStop. So to me, GameStop is just the more recent one, but Volkswagen was the one that took everybody by surprise. Whether you were in the United States or in Europe, I was trading in London at the time, where I traded for 14 years. So I got to experience a lot of the European stuff firsthand, and stuff that people don't necessarily talk about or pay attention to, but it's just as interesting. And that to me was this GameStop was just it just was like perfect example, or it's perfect impetus for me to talk about Volkswagen, because to this day, I think that was the craziest thing I ever saw. Like watching the share price just go up to like 1,000 euro, and thinking like, oh my god, like this is like, if I was in a coma and like I didn't see it until this moment, I'd be a very rich man. If I owned Volkswagen, was in a coma. I always tell myself that when I sell something too quickly. Anyway. That said, this is Brian Anderson, aka Stock Bro from the Bro Pit, aka the real day trader of Beverly Hills, signing out, saying goodbye and good luck, and subscribe to the channel if you found this remotely interesting or useful.